Welcome to the Mason Duchatschek Show. This episode is brought to you by Workforce Alchemy, helping leaders improve hiring, engagement, and retention while uncovering people-related profit leaks hidden in everyday operations. Today's guest is Jacob Chase, founder of the Infin, and that is a company rethinking how organizations measure and reward performance. After seeing firsthand how top performers were undervalued by traditional compensation systems, Jacob built a model that brings real-time visibility into who is actually creating value inside a business. He's here to break down how leaders can build smarter, fairer systems that truly align people with performance and growth. So happy to have you. Welcome to the show.
Mason, it's a pleasure to be here. Thanks for having me.
So what did you see at your last company that made you realize that traditional compensation and performance systems were fundamentally broken?
Yeah, so a little bit of context. I was running a 150 person real estate services business. And as I'm leading this is my first kind of executive position, I'm seeing some things just kind of in our traditional HR program that just wasn't really answering some of the questions that I found important. And one of the real highlights was we had an accounts payable guy, a typical low level staff member. Market said he was worth $55,000 a year in salary, but he was a total rock star. He was way above and beyond his job description, a huge kind of cultural torchbearer. People depended on him for all sorts of things like IT, vendor issues. He was the go-to guy, did everything with a smile. And it was really bugging me that I didn't have a way to really value his contribution and, beyond kind of a salary band or a job market description. And because the things he was bringing was so much more valuable than, what he was just typically assigned to do. And it really kind of set me down the rabbit hole of like, how do you actually measure that and figure it out? And ultimately I think we come up with some pretty good solutions.
So I guess I've had this conversation in the past with friends and peers about the difference between transactional employees and transformational ones. When an employer looks at a transactional employee, they look and say, what is the minimum cost I have to pay to get this work entailing these tasks accomplished correctly? And let's just say, like, I know an HR person that lost his role and was completely blindsided. And he was like, I didn't do anything wrong. Like, I go, what did you do? Well, I was responsible for payroll. I was responsible for answering employee questions. I gave them employees the right answers on a timely basis. I never made mistakes in payroll. And I could explain employee benefits. And I knew what had happened. His employer looked and said, hey, we can have employee self-service on our website and they can get the answers to their own questions and we can outsource payroll. And all of a sudden they started realizing like they viewed this person as a cost, not an asset. But if that person had been maybe perhaps more instrumental in transformational work, like looking at cost and say, hey, our labor is $10 million a year, but our employee engagement's only half. So, hey, if we can improve employee engagement by even 10%, that's $1 million a
It
year
makes
I'm
a big
saving the
difference.
company.
Right.
Now, all of a sudden, it's okay. This is $1 million a year asset to our company because this person knows how to select the right people, engage them, and retain them in ways that other people didn't. So, like, I understand value beyond what range some computer program or some survey says it should be. So that's why I'm really interested in learning more about your insights on this. So how do you know when your highest performers are being undervalued, even if your company appears to be doing well on the surface?
Yeah. I mean, the way that we kind of think about value is through dependency. It's like who actually depends on the contribution that you're making, and how does that actually translate into results of the organization? Because it's really only the sum total of everybody's contribution that kind of sets the size of the pie for the effectiveness of all of its participants. And, when you set the size of the pie, you then have to kind of determine the size of each slice. And the only way to really determine the size of each slice is through mapping each person's dependencies on each other. And, not just kind of the workflow context, but really the human interactions as well. Like who's learning from somebody, who is just reliable and is chosen to do certain things when there's equal options available. And those kind of things, they show up in kind of a dependency analysis in ways that I think give real credibility to the outcome of the data. And so,
So what does that look like? Because in my mind, and I'm going to this pile of wire coat hangers all entangled with someone in the middle that's got all of this stuff. How do you go about tracking that and making sense of that without being overwhelmed?
yeah, look, I mean, so we looked to kind of other systems that do a good job of allocating value. And it's like, well, what are some of the properties of those? And the one that really sticks with me is the market system. It's like the stock market, right? Where the value is determined by a huge amalgamation of everybody's different perspectives. It's like, so in the stock market, you have your value investors and your index investors and your high frequency traders and your short sellers, and all of these different perspectives of value actually culminate in the price at any given moment. But it's live and it's dynamic, but it's decentralized. And so traditional assessment programs tend to be highly centralized and highly structured, where you've got some person or a group of people determining, well, these are the criteria we think is important, and this is the scale that we're going to rate them on. And that by default misses a lot of the important things that other people value with their interactions. And so the way that you really kind of untangle it is everybody's got their perspective of who is contributing, and you amalgamate all of those perspectives. And that ultimately can kind of create an internal market system for the attribution of credit that can then be connected to the business results to really kind of calculate the size of each person's pie or each person's slice pie. Yeah.
What are the biggest mistake that leaders make when trying to assess talent using maybe traditional review processes compared to yours?
Well, I mean, I think I learned this lesson when I was really trying to value, this accounts payable clerk, where I didn't work with him regularly, but I knew his reputation and I knew his, the value he was bringing, and I realized that it wasn't just my perspective that matters, and it was really the perspective of everybody who worked with him that kind of brought forth his value to the organization. And so I think one of the big mistakes or the big challenges that folks have is understanding that their centralized process, even though they control it, produces much weaker data than a decentralized process that is all encompassing of all of the different perspectives. And so really changing that mindset, I think, is kind of core to unlocking the value that's already inherent in this information in the organization.
So you talk about changing mindsets. Can you maybe walk me through a real example where a company believed that they had strong alignment, but your approach revealed something very different?
I think at my original organization, when we first built this pilot, or we first built a prototype and we were rolling it out, and we really thought everything was going great. And we thought, the business is performing, you know, our turnover is low, people are happy, so to speak. And then you start to see it in the data, and it's like, well, wait, we have some manager problems out in the field. And we start to see information like, well, these people are probably flight risks based on working for a crappy boss and being underpaid relative to their value. And we start to see a whole bunch more kind of context around some of these things that are likely to come up based on everyone's perspective of each other rather than my perspective as CEO. And it really opened my eyes to the validity of incorporating everyone's perspective rather than just my own.
That's a very mature and brave stance. I salute you for that because you and I both know there's a lot of people in a lot of companies that are very performative. They're performing for the boss. And I can remember I was Army ROTC in college. Army ROTC paid for my college. And I remember going through Army training. We had peer evaluations. And we had guys that the term was spotlight ranger. That was those guys that when they were in charge, it was all about, well, I'm going to look squared away. My stuff's going to look tight. I'm going to show off be super motivated and we're going to get everything done, rah, 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 in front of the evaluators. But everybody knew that when the evaluators weren't looking and those guys weren't in charge, they were the biggest slackers around. Spotlights on them, they step up and put on a show. And when it came time for peer evaluations, that all got called out. I'm sure on more than one occasion, there were some evaluators sitting there scratching their head going, man, I totally missed that. I didn't see that. But all these people that work with these people all the time, they didn't miss this stuff. and it was an eye opener for some of them. So that takes guts and courage on your part to be able to sit there and say, "Hey, you know what? I'm willing to hear what other people think and what they value." So cool.
Yeah, well, thank you for that. But I think it's a really important concept where when you have a centralized evaluation system, the incentive is actually to be political. Where, like, you have to kind of self promote a little bit according to these specific criteria. Maybe you hold down some competition and put the spotlight on yourself. But when you have a decentralized assessment system, the way that you garner value is by serving your teams, is by serving those around you and increasing their dependency on you. And that really has a
You're
pro-social
solving a whole
dynamic.
bunch of problems before they occur too. Culture problems, drama, conflict, unnecessary nonsense, people stealing credit for other people's ideas, people trying to, I hope I can pull this off. There was a friend of mine that talked about his culture in a non-favorable way, but I think he called it grab credit, duck responsibility, and blame someone else. That was his culture. When it's, as you say, decentralized, people don't get away with that nonsense. And that is a bunch of nonsense. And that is the kind of stuff that just kills companies' employee engagement numbers and their retention and their labor costs. That is, so I love what you're saying.
Well, it
What should a CEO do when they suspect that their compensation structure is not rewarding actual value creation?
Well, the first thing you have to do is measure what value is actually being created. And, only through really understanding the centers of value and who's responsible for it can you then begin to align the rewards accordingly. And, I don't know of another way to do it beyond the way that we're doing it. And it's really I think we're the only person or the only company that's doing it is kind of creating this self-assessment structure, this internal market system for the attribution of credit. And when you have that, you have a market system. It's live, it's dynamic. A single person changing a single observation recalibrates the solution for the entire network. And so quite literally, you have a ticker of your peer reviewed work performance over time. Each person does that you can quantify and measure and reinforce based on the right behaviors. And so the kind of the core output you need when you're trying to evaluate that is like, well, what is your proportionate share of contribution? If we have 100 people in our org, are you worth 2% of the org output or a quarter percent of the org output or whatever? And once you have that data and you can then connect it to the business results and you can see where the dollars are flowing and begin to create that alignment in a much more direct way.
Because I could see where you could get some metrics pretty easy for a role like sales, like, what's your new account acquisition average dollar amount or your closing percentage or your client retention rates or your ability to cross sell additional products or services within your existing account base. I mean, I could see where it'd be pretty easy for new account acquisition, client retention, customer satisfaction. I could see where in a role like sales would be pretty easy. Maybe some other roles it might be a little bit more difficult. Can you give me an example of maybe some more difficult roles and how you made it simple?
Well, yeah. I mean, so let's talk about like a little bit bigger picture. And so when you have underlying metrics like a salesperson and you look at their numbers performance, there's a different sort of assessment of your review of them. It's like they may be a high performer on the numbers, but they may be a total jerk and they may be screwing over customer success by not being honest with their clients, or someone else has to clean up the problem down the line. And so you have to incorporate the intangibles into those assessments beyond just the data. And we do that naturally as humans, right? Like we know if we look at our teams, we know who the top performers are and we know who is maybe underperforming. And so that's a kind of a natural human instinct to already incorporate a lot of the available data, but to fill it in with our perception when it's not there. And so again, it's a little bit like the stock market. The companies, they post their public financials every quarter, and two companies could have the exact same P&Ls, but wildly different market values based on the intangibles that are input into that market system. And so it's the assessment, it's each individual's assessment of what they see going on around them that ultimately produces the solution to the distribution.
Just out of curiosity, what percentage of your work is related to others' opinions and perceptions versus data? Because, for example, I know I can tell how some companies evaluate the metrics of their customer service. I've been on the phone before, and you can tell when the customer service rep is trying to get you off the phone quickly because they're probably being evaluated by the average amount of time it takes for them to field a call and the amount of complaints or poor reviews. Well, if they're unable to help, and it isn't even always their fault. I've been on the phone with people that it was not the rep's fault. It was a policy problem that was made above them. They didn't have the ability to fix it. They knew that I wasn't going to be a happy customer. They weren't going to get a good rate, not because they didn't do a good job, but because their company policy was terrible and couldn't fix my problem. And they just realized, hey, they just dumped the call. I start over as a customer from scratch. They don't have any metrics showing that I was a dissatisfied customer. They realized it was going to take a lot longer time. Their metrics probably show they're great when, well, I guess I don't know if that would be a great example because the person actually didn't do a bad job, wasn't their fault. But let's say for the sake of discussion, maybe the rep was terrible or incompetent and didn't want to help or did have a bad attitude and they just dumped the call. And it's like, hey, if they dump every call, it's going to give them a bad review and it gets thrown into the queue and someone else deals with them. The metrics would show that, hey, this guy's great. Look how short, look at the limited amount of time he spends with his average customer. He doesn't get any complaints. The data might show that this guy's a really good performer, but the people that are paying attention around probably know better. So that's why I'm curious what the balance is in your opinion between data and observation and opinions of those around them as far as peers.
Yeah. So it's another kind of question about centralized judgment, right? Because their incentive structure is probably going to be based on some of those metrics. And when you have centralized structure like that, it promotes local optimization. And what it doesn't do is promote, overall business success. And so that rep, who's following their centralized metrics in that sense, is that where that's going to show up is in the collective success of the business results being impacted negatively. And so there's really only one metric that aligns everybody from within, and it's the value of the organization. And this concept of shareholder value and that kind of thing, being the end all be all, over time, I think is true because that is the single determining factor of the effectiveness of the collective from within. And so the only way to really align on the collective is through the distribution of the decentralized distribution of value rather than the local optimization of centralized metrics. What is important though, is that you're monitoring those local performance metrics in order to inform judgment about your perspectives rather than following the incentive structure of centralized metrics that can lead to local optimization.
So, how do you approach building a system that measures contribution in real time without creating internal competition that becomes unhealthy?
I mean, ultimately, I think it changes the incentive structure from one that already creates competition and unhealthy kind of political behavior
Fair
to
enough.
one that actually incentivizes service of the people you work with. Is because the way that you become valuable is by being of a service mindset to everyone that you're collaborating with. And so it naturally, from our experience, people respect a meritocracy. If you have good scores because you believe in a system that is assigning those and you deserve it, that is respected, that is aspired to, that is not illicit kind of negative competition. It elicits a lot of kind of pro-social and pro-team dynamics that are already kind of incumbent in high-performing teams.
So, what are the key roadblocks to creating a truly unbiased talent assessment system?
The key roadblocks, I think, are mental. It is, do you want to know the truth? And do you really want to understand how people perceive your contribution? And are you motivated to respond accordingly? Because when you see your scores, it may align perfectly with how you think you're doing, but it may not. And what we've seen is that the resistance to this information is the key roadblock. But once people have it across the board, like there's an inherent intrinsic human characteristic to respond to it with favorable change. Like people are motivated to improve their performance at work because they believe the way that the value is being attributed and they understand how to grow their own value. And the behavior change across the board is almost instant.
You mentioned earlier about identifying risks associated with, hey, we got a manager that's causing problems out in the field or something like that. How do you know when a manager is underperforming before it becomes obvious in the numbers? Or can you tell?
Well, I mean, the reality is that it's obvious in the numbers almost instantly. And, if people perceive a problem the moment they perceive it, it can be in the numbers. And if that is a widely held view, it shows up and you can see, well, we have 4 of these type of managers and one of them is far below the other 3. That gets really obvious really quickly.
Can you maybe give me an example of a time when feedback exposed a leadership issue that would have otherwise gone unnoticed?
Yeah, I mean, it was instant in like, I'll go back to my previous organization when we were just testing and rolling out the system. We had 2 underperforming managers in the field, and we only did the test for about an hour. And we could see the data right away based on everybody's perspective in that particular location. It showed up instantly. And, you go do a little bit of digging and not asking around, and lo and behold, there was some intervention. And that was not something that would have shown up in any sort of kind of standard HR review process that we were implementing at the time, at least.
What should leaders focus on first if they want to move away from annual reviews towards more of a real-time feedback model?
I think is a an interest in knowing the truth, an interest in decentralizing assessment and welcoming that information because it is closer to the truth. And there's some leaders who kind of like their control structures, but that can impact business performance in meaningful ways where, the teams that are really engaged in like, all right, we want to get better, we want to know the facts about some of the things we may not say to each other, but are important for our ongoing performance. Embracing of that type of intel is really the first step because that's the key to unlocking the rest of the data.
So, how do you implement real-time feedback in a way that employees actually trust and engage with? Do you have any tips or suggestions about how to do that?
Well, you have to have an engaging system, right? And the other thing is that it can't be done by centralized mandate. If the boss says we're doing this, everybody, every day, real time feedback for everyone, it's just not going to stick. And so people have to have an intrinsic interest in participating, in sharing their observations. And the way that we do it is that you share observations, you learn about yourself. You share observations, you get feedback how to enhance your career. You share observations, you understand better how you are fitting in to the team dynamic and the team performance and elevating your own prominence. And that type of feedback loop, we found to be sustainable and that people are engaging in keeping their observations current because they're learning more about themselves at the same time.
I think this has to be an eye opener for the boss or the owner because I've been, unfortunately, not often or for very long, but I have experience with groups where there is an incredibly toxic employee who has a ton of institutional knowledge and abuses in this particular case, abused the owner's latitude, felt untouchable, like nothing's going to happen to me because I know more than anyone else about this company and how things work. And I'm too valuable to be replaced. I know there's an old saying, anybody's replaceable, but this person did not believe they were replaceable. And you want to talk about if this one particular person had been eliminated from that area of the building, you would have seen the morale of the entire group and the performance of the entire group and the attendance of the entire group go way up, all of them. Boss oblivious,
Yeah.
literally protected this person like they were the golden goose and that walked on water and knows so much and so helpful. But had there been a mechanism where the boss could have seen that toxic employee through the eyes of the non-toxic employees, things might have been handled differently.
And that goes back to wanting to know the truth. And, you have to be interested in really understanding what's going on and wanting to do the right things accordingly. And then aligning the incentive structure accordingly in order to get that information.
Honestly, I think if the people in that side of the building and this toxic employee affected that whole side of the building, they would have done extra to make up for the work that the toxic employee purportedly did. It would have been worth it to work harder to not have to deal with that particular employee. And there's just no way for them to communicate that. And people left because of it. And some of them actually stayed and did enough not to get fired. Just back down, like, okay,
That I mean, that's
let
disengagement at its core, right? It's like, you don't
absolutely.
and
Go ahead, hero. Show us how it's done. You know everything. Go ahead. Show us how. Let them.
yeah. But
What?
when you see that data for yourself and you can do the math on like, well, how much is this person being compensated relative to how much they are bringing to the team, and you see a big negative number, there's another kind of business incentive beyond the cultural one to make change.
This
And
would have been a big number, a big minus.
yeah,
What are the biggest mistake companies make when they try to modernize their performance management systems, in your opinion?
in my opinion, most of the kind of the modernization of this performance management is really just kind of augmenting the old methods with tech. And
Okay, fair.
it's making it easier, it's making it more efficient, but it's still providing this kind of centralized assessment structure and predetermined criteria, and it just doesn't capture all of the intangibles in an important way. And so I think, advancing the old process is really kind of the biggest mistake that I see.
So one of the things I think might be tricky, I'm curious what your take on this is how do you balance transparency with sensitivity when you're surfacing data about individual contributions? That's got to be a little tricky. What
100%, right?
insights do you have for how to do that well? Do's or don'ts?
People have to feel comfortable that the information that they are inputting is anonymous, is confidential. People aren't they really aren't going to share what's on their mind in most instances if they're scared that it's going to come back to them. And so you have to be able to clean it for anonymity in order to then be able to provide it to somebody. And there's some real nuances for how you do that. Because humans are
I'd be
smart. You
curious,
can
in
think
some of
about
the smaller
context.
organizations, that might be kind of tough.
You know, it's doable. It's very doable. And so, we've really never had any client think they know who's provided the feedback. And,
That's
there's ways that you can package it up, that you can combine it with multiple pieces of feedback, that you can delay timing appropriately and remove some of the context while still providing really valuable feedback. And so one is feeling comfortable inputting the information. And, the second one is like, as if you as a user can't guess who's providing your feedback, that also builds trust in the system.
so for a founder or CEO listening right now, what's the first practical step that they can take to better align their people, performance, and compensation?
First practical step you can take is start to measure who is contributing within your organization and see in a decentralized way who the key people are, who may be carrying a title or a compensation package that's greater than their actual input, and creating that incentive structure for people to kind of move away from a political centralized system and have the incentive to serve. I think those are the kind of the key first steps.
So this is my favorite question, and I always save it till the end. I know you've got remarkable and very unique experience and valuable perspectives and insights. For those who are listening, if there was just one piece of advice that you could give to anyone listening, what would be the most important piece of advice you could give them and why?
I look back to my own kind of transformation of like realizing that I didn't have all the answers and in allowing for that. And when I realized that like it's not just my perspective that matters, it enables you to level up and really understand what does matter and then be able to act accordingly. And I think allowing yourself to, grow in that dynamic is really important as a leader and really can have direct translation into the performance of your organization as well. And so that I think that's the key lesson that I'd leave.
So if people want to know more about you, the work you do, and how you serve companies, what are the best ways for them to learn more or connect or engage with you or your organization?
Yeah, I'm active on LinkedIn at / Jacob D Chase, D for Daniel. Our website is www.theinfin.com, and I can be reached at jacob@theinfin.com. And I'll respond to everything personally.
Wonderful. Thank you so much for joining us. I appreciate your insights and much respect. To do what you did and what you do takes guts, and not everyone has that. So kudos to you for stepping outside of the norm and pushing some boundaries. But I love it, and I hope that people listening have some ideas and are inspired to take action on them. I appreciate you sharing today. Thank you.
Awesome, Mason. Thanks so much. I had a blast being here. Great conversation.
Thank you.